Nvidia just made history. First company to hit a $5 trillion valuation. Now, to put this into perspective, that's more than JetBlue, Ford, and Spotify combined times 20. To also put it in another perspective, take Amazon and Tesla, put it together, Nvidia would still have a larger valuation. Or let's say if Nvidia were a country, it would have an economy larger than Italy or Canada. So that's the scale we're talking about, guys, when it comes to Nvidia hitting that $5 trillion valuation. Now, the entire market was euphoric. And in fact, I personally know a lot of retail traders who are looking to long Nvidia call options contract at market open. But because I noticed something in the technical analysis and the market structure, I actually decided to do something different, which was to go short on Nvidia. And in this video, I'm going to break down the gap hunter model that I used that enabled me to identify an opportunity to go short on Nvidia when most of the people in the market wanted to go long. So sit back, relax, and let's dive into the charts.
Okay, so let's take a look at NVIDIA. So over here, you can see that on Tuesday, October 28th, the stock went from 190 and rallied all the way up to 205. And then you can see that on Wednesday, it was at around 210. So at this point, a lot of people were wanting to take NVIDIA long, which naturally makes sense, right? NVIDIA shot up, hit that $5 trillion valuation. Now it's at a new all-time high. But one of the things I did see was that there was this little gap. And that's why I call it the gap hunter model. Because one of the things I've seen is that market makers tend to like to close gaps, right? And then the other thing I did notice was that we had a demand zone sitting right there, right? So my thought process was, first, let's identify where this stock could potentially go. So using a trend-based extension, and the thesis I had was at market open, you're going to see market makers take it up towards this 212 level and then bring it down to try and close the gap. So instead of me going long, I would wait for price to settle and then look to go short. So that was my trade idea. So given that logic, let's take a look at what happened when the market opened. So you can see at market open, price went up and then it starts to retreat. And let's flip down to a 15-minute. On a 15-minute, you can even see it much better, right? So 9:30, price pops up, retreats, and then starts its way down. So you can see my private Discord group on October 29th at 10:29, I actually sent out a message saying that, hey, here's a potential play for NVIDIA. And let me just make this image bigger. You can see that 212 level that we had called out, right? We're looking for price to come towards this 212. And I'd identified a level where price would respect and most likely come down. So this is what I shared in the group at 10:29, about an hour after the market opened. And as you can see, progress, it starts to respect that level. And there you have it. So let's take a look at it closer. So all I did is I waited for the market to just kind of like play out for the first hour. And I was looking at it on a 5-minute. So on a 5-minute, here's what you could see, right? We had established this bearish range, right? And after identifying that bearish range, my focus was now to see if price was to pull back, where would price pull back into? And it was in this gray box right here. So essentially, the move was look for price to come around here and then come back down. Because I've seen this, I've back tested it multiple times. And if you take a look, that's what happened. Price goes in and then retraces, major sell-off, and they make their attempt to try to close the gap. So to break it down in 3 simple steps, when you do see a gap at market open, there's a high probability that market makers might try to come and close the gap. So what you might want to look for is manipulation to the upside And then when you see it come down first, don't take the first move to the downside. Wait to see if it comes and retests the high. And if it rejects the high like it did here, now it's a potential opportunity for you to go short with this. Okay. So that is the model. And in the description, I actually do have a PDF that goes step by step walking through that framework. So feel free to go into the description and download that PDF. Like anything, I highly encourage you to actually do back testing on this strategy. I've done my own back testing and I've seen that this gap hunter model works. But if you're going to be deploying this strategy for your own trading, I highly encourage you to do your own back testing, pick up some data on this strategy. And if it works for you, feel free to test it out. First by paper trading it and then actually deploying actual live trades onto it after you've back tested it, because anything that I share here is for educational purposes. And then last but not least, every 2 weeks, I do hold a trading boot camp where I go through high level technical analysis. If you want to sign up for that boot camp, the link is also in the description. So feel free to just go into the description and click on the link and I'll see you in the boot camp. So I hope this gap hunter model helped. And like I said, go and back test it and see if you get similar results like I have. And myself and my Discord community, we've been able to find tremendous success applying this model. So looking forward to hearing you in the comments if you've tried it out and if you've back tested it and if it has worked. I'll see you guys in the next video.